Hello Maverick traders and welcome to today's currency recap. It is Thursday, March 16th. Well, the equity rally continues. We have rallied every day of the week so far. We'll see if tomorrow can make it 5 for 5. Yields have bounced again. I mean, yields are trading in a manner that I have personally never seen before. And I've spoken to people with decades of market experience and they've never seen bonds trading like this before as well. So it's a fascinating time to be looking at treasury instruments. And the dollar is holding steady, slightly down on the day today. But as we'll take a look a little bit later on, price action in the buck does remain pretty stable, relatively speaking. Okay, so taking a look at a price chart of the S&P 500 weekly time frame. I'm on the weekly time frame right now, just so we can zoom in a little bit closer on all the action since the 2022 top. I have some Elliott wave labels here. For those of you that are familiar with Elliott, you will see that I've identified a B wave correction in the stock market right now. And that's pretty much the price action that we've been trading in since June has been sideways, and that is indicative of an Elliott wave triangle according to my analysis. If you're not familiar with Elliott wave, then here's what you need to know. The price action since June has been part of a bearish continuation sequence. And we can see that best represented as a pretty strong balance between buying and selling pressures. So neither bulls nor bears have been able to firmly take control of this market. But given that the overall trend in the market right now is down, given that we've topped in the stock market in late 2022, in early 2022, late 2021, given that the trend has been down, this sideways movement will ultimately resolve with another leg lower. That's the most likely scenario. So the key level to watch for this triangle scenario on the downside break is 38.08. So if we take out this week's low, I think the party's over and we're going to get a fairly swift move lower. What comes after that? Well, I'll be sure to let you know. Taking a look now at the total world stock index, we trade below both the 20 and 50 period moving averages, but we've put in a strong showing over the last 4 days as well. Price is not really breaking down too much. It'll be interesting to see how global equity markets hold up as we head into Fed week next week. Crypto. Wow, crypto has been the big surprise for me. It's held up so much better than I thought it would. And here's the thing, I think looking at this price chart, looking at the extremely strong price action of the last few days, I think it's very tempting to turn outright bullish on the broader crypto market. I think that's a little bit premature, right? I'm leaning towards being bullish, but I have a feeling we could be trading into an enormous bull trap here. So as tempting as it might be to buy Bitcoin on a momentum basis right now, given these valuations, given the overall price action in the broader market, I think it's actually prudent to stay in cash as far as Bitcoin exposure or crypto exposure goes in general. Stay in cash for a little bit longer. If we do break out of this upper level at 27,385, then I think that does give us the green light to look to buy crypto on dips. But if we can't hold above that resistance level, then I think we're going to much, much lower levels in the index. So overall, we're going to give this market a -2. We're below both moving averages, and the slope is still neutral. It hasn't quite crossed bearish yet, but that could easily change one way or the other, depending on how we trade next week. In terms of news, there isn't too much tomorrow. We do have some information coming out of the US, and that'll be a consumer sentiment survey. Unless the reading on that survey is extreme, either an extreme miss, both the upside or the downside, I just don't see this being a big market mover. Okay, now in terms of currency analysis, kicking off with cryptocurrencies, the 4 major ones that we track all did really well today. Bitcoin up 2.5%, and Litecoin being the clear winner, up a little bit over 3%. On the fiat side, the Aussie and the pound led the way, with the Kiwi trailing not too far behind, very close third place. And then the Swiss franc and the euro and the Canadian dollar held their heads above water, and the yen and the dollar underperformed on a relative basis. In terms of velocity, there just isn't a lot of velocity in the market right now. And it'll be curious to see whether overall volatility and velocity remains relatively low until we head into Wednesday next week, which is Fed Day. So keep an eye on that. It'll be very interesting. Okay, now in terms of possible trades, I have a lot of recapping to do. So a lot of these currencies have pretty much played out exactly as I said they would. The Aussie's gone and retested the December 2022 lows in the Aussie basket. At this point, I am now neutral on the Aussie. If we break, if we break this level, then the obvious range of supports in focus would be the low from January 2022, which is not much further below, and then the low from December 2021. So I'll just mark those on the chart so you have some clear parameters to be working with. But I'm pretty neutral on the Aussie for now. You can see we've got an oversold on the daily time frame on the relative strength index. I do put a fair bit of weight into oversold readings on higher time frames, so I wouldn't be surprised to see the Aussie bounce, but I don't think it's going to be a uniform bounce against everything. Canadian dollar has played out exactly as anticipated as well. We didn't break out of this this resistance zone here. We crashed off instead, retesting the lows from the beginning of the year. I'm also neutral on the Canadian dollar. I think if we do break lower, then the obvious level to be targeting is the low from September 2021. It comes in at 0.8226. All right, Swissy fell just short of my target, literally just short. And I said that when the thrust out of this triangle resolves, we're going to see a big move down in the Swissy, and that is indeed what we've seen. I think the move in the Swiss franc is done, and we're going to see a much weaker Swiss franc across the board pretty much for the next several months. Euro. So I said we broke out of that triangle successfully, but we're buying right into overhead resistance, and I don't like that. And sure enough, although the euro did break out of that blue triangle, we traded it into this resistance zone and then came crashing right out of it. You can see how strong this zone is going back to 2020. To about 2020. Right now, we're just back in no man's land. So I don't have a strong view on the euro. I think it's best to be avoided. Let's wait for clear signs of directional intent in terms of euro traders. For now, I don't have a strong view on the euro one way or the other. The pound, waiting for a breakout to the upside. As simple as that. Keep an eye on these blue trend lines. If we can stabilize above this blue trend line, then I would be looking for much higher in the pound, eventually testing the highs from February 2022. The yen, so we broke out of the wedge, but the pullback today was pretty steep, especially given that we gave back. We did make a new high on the day beyond yesterday's high, and then we just sold off hard. Given those parameters, I do think it's possible that there is some yen weakness ahead in the near term. It wouldn't surprise me to see this down, up, followed by another down sequence here, bringing us back to the lows from December 2022, if not a little bit lower. So right now, for the short to intermediate term, I'm bearish the yen. The dollar, I think this is a bull pullback. That's kind of how I'm looking at it. I don't think that means we can't trade lower in Elliott wave terms, right? Those of you who have heard me speak about Elliott wave before, I look for 3-wave corrective sequences. Right now we have one move down, we have the bounce. I think we need one more move down. So I think we're still in the midst of this bull pullback. I don't think we have a green light to buy the dollar yet. So that's kind of what I'm seeing in the overall basket here. So just zooming in on a 4-hour chart, again, we have a move down. We have a bounce. I think we need one more move lower before we complete this bull pullback. Kiwi. Kiwi dollar is pretty bullish in my opinion, especially if we're looking at this chart pattern going back to December 2022. This really does look like a textbook falling wedge to me, and I think we're eventually going to break out of this wedge to the upside. So right now, if you ask me what's a really good trade for the next several months or at least the next several weeks, I would say look to buy Kiwi Swiss. I think the Kiwi long-term looks very promising, and I think the Swiss franc, its rally is exhausted. So that would be the number one trade on my radar Doesn't mean you go out and buy it right now. You still have to follow your trading plan, but overall, I think that's a very promising trade to look for. All right, so in conclusion, equities are likely still in a bear rally. I think the dollar is still in a bull pullback. Tomorrow, I personally won't be looking to take too many trades, if any trades at all tomorrow. I'm more inclined to wait and see if there's a way to position myself heading into the Fed rate statement next week, which will be a volatility event. So I'll be looking for that. And then ideally, the Fed announcement is going to create conditions for follow through, right? So for example, if we're looking to buy the dollar heading into Fed week, you could position yourself maybe Monday or Tuesday, and then Wednesday leading up to the actual announcement, you might be able to trail your stop, be in a risk-free trade. And then if the announcement goes well, then you'll get that volatility follow through and the trade should outperform. That's a perfect dream scenario. Sometimes it is possible to get into those positions ahead of these major news events. Sometimes it's just not. It all depends on the market action and what we get from the market. All right, so that's it for me, folks. Thank you very much. Look forward to speaking to you next week.